Welcome to episode 4 of Behind the Headlines with myself, Steve Gomez, and Michael Noss. Each week we try to break down what the actual technical charts are telling us in conjunction with the headlines and the stories. But before we get into today's agenda, please don't forget to share, subscribe, alert, all that stuff, because we are coming at you every week and we intend to give you some timely content, things that you can benefit from on a Sunday night going into Monday morning. So, with that said, I'll turn it over to Michael.
Yeah, so as Steve said, we appreciate all the comments. We read them all. If you guys have any charts you want to look at, just certainly let me know. This week we're going to talk about some headlines that came out that are very bullish and what that generally means for the market. We're going to talk about the US maybe banning TikTok and what that could mean for some of TikTok's competitors. And we're going to follow up with some gold and psychedelic talk that we had last week on how we trade them, or at least how we kind of suggest or recommend that people, things that they don't do that will get them in trouble. But without further ado, let's just pop in. Let's get started here with this Barron's covers. This was March 11th, so the very beginning of the week this came out, and you can see right on the screen, obviously incredibly bullish. So as we're taught about when I took my CMT, quite often these can be warning signs, I guess is a good way to put it, where by the time a cover like this hits the press, everyone has to know that it was a bull market and almost agree that it's a bull market. That has to be observed and then written up and sent to an editor, that's then sent to a publisher, that's then sent to a graphics designer, and then they have to wait until they print their next edition. So just a long period of time. So the idea that we're taught about in the CMT is that generally, or I guess never, you see stuff like this at bottoms. Not always do you see this stuff at tops, but often. Now, Steve, I don't think you're going to be disagreeing too much here, but what do you think when you start to see covers like this coming out of the traditional magazines?
Oh, as you said, traditional magazines, who are those geared for? The retail public. The information is being disseminated and designed and given to the retail public. And if you didn't know, a little surprise, the retail public is the bag holder. They're always the last in the food chain. If you've ever bought an IPO stock and watched it tank the next day, you thanked the person who underwrote that and handed it to you as a retail trader. But all cynicism aside, my dad used to tell me. By the way, my father taught me how to trade, so it's in my blood. And he used to tell me, you know, when the cab driver or the guy spraying the fruit with the water at the grocery store starts telling you what stocks to buy, really, really need to be aware and don't don't go long. Go to cash. Just be aware that something might be coming, because usually when it trickles down to that person, we can even go back to the whole GameStop thing. How many people on the
Mm-hmm.
retail side chased GameStop way too high, and they learned a very valuable lesson.
Yeah, and it's they used to call it the shoe shine boy indicator way back in Wall Street, and it's a trade as old as time. Is that the people who are looking at this stuff and studying it every day are going to be earlier on a trend than people who just read the Barons when it comes through, whenever it comes through at the end. And just like we've talked about with a couple things, and we'll go over again with gold and psychedelics, you don't want to be the guy who's chasing. I think a lot of traders could turn a lot of their trading around if they simply had a mantra of, I'm not going to be the guy who's chasing. I'm going to find pullbacks or something like that in order to take a trade. So, Steve, you want to go over the QQQ
Yeah,
chart, the NASDAQ here,
I
and
do.
let's see what's actually happening. And is this the time to get insanely bullish because we saw it in Barron's?
Probably not, but excuse me, real quick, I just want to highlight what I'm using. This is a 10, and the red is a 20, and the blue is a 50. Brian Shannon taught me that the 50 SMA is basically your general health indicator. Stocks or indexes that are above this indicator would be considered healthy. Anything under the 50, you don't want to touch long, because they're really not healthy and they need to be proven. Look at the beautiful semblance of the straightness of this trend. I mean, it's
Mm-hmm.
almost like it's just a machine that's been buying this market for the last few months. But a little attempt here at all-time high, and that was basically a daily chart here, thwarted and pulled back. But something has happened. Now, the day is not over. It's a Friday, and we might be developing a little bit of a base here, which brings me back to these charts, these candles. There was some weakness in the day below the 20. I call the 20 affectionately the backstop, and I call the 10 affectionately the momentum indicator. But a lot of times the 20 will catch the price in and push it back up into the trend. What you don't want to see is a closing candle, and we might have that here above below the 20, just like it happened over here. But they did, stick save, to use a hockey term. You Canadians are like that.
Yep.
Pop the price right back into play. But we're getting a little choppy and thin up here. I feel like if we close weak today, we'll see how we go. The 50 SMA is likely in play. I want to bring up two more items. I want to look at the weekly, since we are close to the end of the week here. Um, Still pretty far away from it. We'd have to crash through lows. If we did that, this is the rising 10 weekend indicator, the 10 SMA for the week. And you can see the momentum has been held in a wonderful predictive pattern. At some point, that'll give away, but we're entering a point what we call an area of decision or an area of interest where we have to watch the price action. Again, this is a weekly candle. We'll see how it closes, but any weekly candle that does violate that 10 week, you're going to have to expect the backstop of the weekly, the 10-20 week, to maybe come into play. And lastly, one last thing, staying in the vein of the NASDAQ, I'm going to stay on the weekly, excuse me. I want to go to the semiconductors because these were the driving force behind what happened in the Qs. And as you can see, this was entering a bit of parabolic land, if you want to. And when the price gets this far distance from the most immediate fast point, what I call a fast line, 10 SMA and a 20, there's just way too much space in between there for my liking. And so I think you have to ease off the pedal a little bit. Now, am I calling for a crash? Hell no. I'm calling for a simple correction, a healthy pullback. And again, this is the weekly chart. So you can see there's a lot of possibility that 200 on the SMHs could be in play coming up on the weekly. So are those headlines showing the true story? No, I think Michael and I are kind of looking at the pro side and the experienced side and saying, beware. It's what we call a contrarian indicator in the mass media.
Yeah, and it's like we talked about with gold, it's like we talked about with psychedelics, with a lot of things, is that that big wick that happened that you're showing last week on the SMH, you don't want to be the guy who's buying up there. Like somebody is, you don't want to be that guy who's buying right up there. So that to me is just somebody impatient, right? They don't have a plan. They go, I can't take it anymore. Nvidia's just going to go up every day from now on, so I'm going to buy it, and that generally speaking will be a rough top. So I agree with Steve that a pullback, or I always just like to, there's another Brian Chanism, he's got two shutouts so far, is that these overbought conditions can correct via price or via time. So we could be in for a little bit of sell off, or more frustrating for us as traders, we could be in a little sideways action, because I know that both of us, we don't care if the stock market's going up, we don't care if the stock market's going down, we just want some sort of trend to play with. But if we end up just consolidating sideways, that kind of sucks. But again, when you see these magazine headlines, just know there's so much, they're months before someone has an idea until it actually makes it to the headline. So the trend's been going on for that long, it might actually end up being a top. So
Does the
now,
chart confirm the story? No. I just
no,
want to say again, reminder, I want you to take something away from this. Do not be this person that's buying up here to
no,
establish a long position. This is what we call FOMO, and it's one of the worst traits a trader can have, is the fear of missing out. You've got to be patient.
yeah, absolutely. Now, the other big news article I want to go over is this. And, if you've been living under a rock, it looks like, I don't understand, again, as a Canadian, I don't understand the American, how they pass laws and stuff, but it looks like a
I
big
don't either.
first step forward to potentially ban TikTok. Now, TikTok, as far as I could tell, is not traded, the ByteDance or whatever that owns it. So I don't think there's a direct play to be taken there if they decide to or if they don't. But I think what me and Steve are going to go over a few of is potential companies that could benefit if TikTok goes down. And this is kind of second level thinking for traders. And the example I always give to this kind of second order play is one of Warren Buffett's best plays out there when wind energy was starting to pick up and everything is he bought railroads, and people didn't understand. So, oh, well, if you think wind energy is going to be a thing, why not buy the people who make wind energy? He said, yeah, but you got to ship these turbines around the country somehow, and the only way you can do it is via, at the time, via train. So just the idea of sometimes it's not the thing that you want to take a look at, it's the second order. So what is going to benefit or what is going to be a drawback if that occurs? So Steve, you're going to bring up I think Rumble, and then we'll take a look at maybe
Yeah.
Meta and Google after
And
that.
I've actually been trading around this, and a term trade around, I'm going to try and use that a lot every week. And that means a stock that you're familiar with, that's in the news, that has some headlines, that has some volume. You can get in, you can get out, you can sell half, you can buy those half back. That's kind of what I did, is I
Mm-hmm.
participated in this first move. And really what's happening behind the scenes is the chart is confirming that Rumble might be a player. And they, in fact, did confirm it. We probably should have that headline, Michael. They did, in fact, send a letter of intent to ByteDance saying, we would like to talk. And that got Rumble really excited. And there's the chart confirming the story. The chart is also confirming my theory of about a day and a half of explosive moves before things roll around and reset. So that's where we are now. I'm going to let you know on the trade around, I've nibbled back in at Rumble right around this level, just right around right here. And I want to wait and see how we close. It's a half position. You kind of dip your toe in the water and see what happens. But you can start to outthink this. Do they have enough money? What's their balance sheet like? You can go a million ways of how this is going to sort out.
Mm-hmm.
But all you can do, again, is play the charts till they confirm the story. Rumble confirms that they might be a player. Now, Digital World Acquisition, on the other hand, seemed like it had some interest, but here it's just flailing. It's below the 20, it's below the 10, and here comes my Brian Shannon's, I should say, line of health, the 50 SMA. So it's kind of a do or die situation. The rubber is going to meet the road. Digital World Acquisition, this is really right up their alley. And if you want to get into I'm not even going to get into the other stuff. The point is what is the chart telling us? It's in a holding pattern. So the only thing I see of interest in terms of who could benefit from maybe getting involved with TikTok are those two charts. I think you're going to look at some other charts of, sector players, the bigger players.
Yeah, because so I wanted to bring up Rumble. So there's a couple things if we take a look at the some things that could potentially affect this. We actually have the short float right here. So we have right how many shares are out there in the float that are short. That's 22%. I think that is reason enough that you can actually see. I put a line in. I bought some as well and got out during the spike, and just like Steve, I'm going to look to get back in if this holds, because looking at the amount of cash they have on hand, which is only here, they only have $200 million, right? I don't think that's going to be nearly enough to buy a platform with 100 million active users in the United States. But that sometimes doesn't matter, right? The fundamental stuff that all gets worked out later. If I'm an investor and I'm one of these 22% of people that is short Rumble, just the fear of the chance of the possibility that they might be able to get this asset is enough for me to say, okay, I need to cover this short and move on. I think that's part of what's happening. And same with DWAC. It's a pretty cash poor type of company with only $60 million total in cash. I think, and I don't know how much this will affect it, I think that we've got a couple plays here with Meta and maybe with Google. Now, we'd look at Meta's cash on hand, they have $65 billion, right? That to me is a little bit more in the neighborhood of a potential buyout. But the kind of question I wanted to pose to you, Steve, does it make any sense for a Meta that owns Instagram and Facebook and all these things, and then also Google that has a competitor with Facebook? Are they going to be even interested in buying this, or are they going to be just more sitting back and hoping that it dies on the vine? Because the idea is that if you lose TikTok, maybe more people are going to YouTube to get their 10-second over and over again video fix as opposed to going there. And then, you know, yeah, do they want to buy it to get the users, or do they just want to just
I
hope
think
that it dies?
I have two thoughts really to answer your question. I think they would be wise to sit back and see what happens. The second thing, and it's where it gets really nebulous, and I don't even want to predict it, is are we entering antitrust type territory here? If one of these guys
Mm,
popped in, does Congress decide, well, we don't like this solution either?
yeah.
I can't. All I do is read charts, Michael. I can't
I
speculate on
know.
other stuff.
Well, that's why we're doing what we're doing, right? There's fundamental stuff. There's all this that neither me or
So
Steve will pretend to understand. We don't really care
looking
to.
at Google, looking at Google, all I see is a kind of a short-term channel that's ran up and down there,
Yeah,
and we're at the high end of that down channel, so I wouldn't be buying it here. Maybe it settles in and it buries at the what is that level, the 140 level, and
yeah,
builds a base. You could watch it how it handles it there, but it's kind of in high end of the channel for me here.
yeah. It's got this kind of keeps bouncing and then selling and bouncing and selling. If we look at the
Yeah,
weekly
yeah.
chart, which is right under me here, it's it's very very strong, but it still definitely has, I think, work to do. That pullback hurt enough people that I think it's got some work to do before it hit highs. So that's why I think both of us have the same idea that these small players, even if you put a 1% probability on a Rumble or a DWAC being able to raise the money to even get something like this going, that 1% with 22 or nearly well over a fifth of the entire float short, to me, that's enough that if I was short this stock, that 1% chance that they're going to get 150 million active users makes me wanna run for the hills.
And to me, that's the perfect scenario for my theory of the day and a half, which, by the way, is a big move day one. You can see that. You close at or near the highs of the day of a big green candle out of a significant break with big volume. You carry that trade into day two, and the first half of the day, you let it rise, and then you become a seller midway through day two. It's
Hmm.
just my day and a half theory that momentum, at least in this current market environment, if you're a swing trader that's trying to get pretty quick moves like I am and not afraid of holding something overnight, that day and a half move on big volume, I'll take those 8-10% moves all day long.
Awesome. So we wanted to talk. Let's just start with gold. We wanted to talk about gold. We talked about this last week, and I think this was a really good maybe recommendation or idea for people where we noted that gold was breaking out into all-time highs, but it was getting a bit nuts. You're talking. It was up when we talked about it 6 or 7 days in a row. You can see those two giant weekly candles out there, and we said, gold looks good, but it's gone a little bit too far too fast, and you need to wait for it to breathe. And I think this is going to be a common theme with what we talked about at the beginning when it came to the overall market. When you go into the daily chart, it seems like we were right on that one, Steve.
Well, I'm going to do this before I go to the daily chart. It just occurred to me we're looking at the weekly, and we had a nice breakout as we've been looking. But is this little red pullback, is that enough to expect? I don't know. Let's go to the daily chart. I'm going to show you something. It's flagging right at my favorite spot. I mean,
Hmm.
that is a pennant of pure design. It's either going to resume the trend, is what a lot of people think in the technical world, or it could break that trend. So you really got to wait and stick around. Now, we are going into a weekend. Gold and silver have a tendency to want to maybe gap up over the weekend. I don't want to lose this topic without bringing up silver. I'll just use SLV. Whenever gold breaks out, silver usually follows. And if you study this right now, the silver gold ratio is extremely wide, meaning there's a lot of upside for silver. There's been a lot of interest in Bitcoin. It's probably actually tamped down some of the gold move because money has to go somewhere. But I think the play is in silver. And I'll just get right into it. I think the gold miners and the silver miners are names you want to watch. Just in the interest of moving along, oops, I'm going to just type those in. GDX is our gold mining index. You
Hmm.
can see it's kind of doing the same thing gold is. They're flagging perfectly. They've reclaimed the 200. They've built a base camp above 200. This is my sector for next week, guys. If you want to asterisk that and cut it up in the socials, this is where I think the interest is going to be coming up next week in the gold miners. We also have what's called the GDXJ. And I invite you guys to go to Google and just search these names on your own. I'm not going to spend time going through all of them. But GDXJ, so I need to type correctly, GDXJ, they're the junior miners, and that's where you can really get a lot of bang for your buck, names that you haven't really heard of. And I'll give you one name before we go. But again, just look at the beautiful, I want you guys to imprint on that visual. I'm a visual person. Michael's a mathematician. We have kind of two different perspectives here. When I see visuals like this, I see clean air. There are no moving averages above. We have reclaimed the 200, and we're building a nice little base camp with the 10 SMA forcing the issue. So I think this is a timely call. So go ahead, go to Google and look at some of the components. But I will give you a silver name. I am long. I'm taking this into the weekend because I like the way it looks. It's Coeur d'Alene Mining. It's only a $3.23 stock. Same scenario, above all moving averages, handily above. And the moving average of the 10 is coming up to force, as we just mentioned. Consolidation is strongest when it's sideways. We can consolidate backwards in price, or we can go sideways, and that's the stronger of the two. And I really expect to see CDE coming out. I might even add to it going into the close.
Yeah, and it's funny. A friend of Trade Ideas and a friend of myself, JC at All Star Charts, always calls silver, what is it, gold's crazy cousin, where whatever gold's going to do from a volatility basis and from a
Yeah,
just range basis, silver's going to do it way more. So if you're betting that the gold trend is going to continue, I think looking at silver makes much more sense because you're going to get just more beta out of it. You're going to get more of a move where if gold moves 1%, silver could move 2, 3, 4% in the same
exactly.
kind of sphere. So I definitely like the look of that one. I like your idea on GDXJ. That I think would be my particular move over GDX, and simply because so GDXJs are junior gold miners, so it's essentially the difference between playing large cap stocks and small cap stocks. Your GDXJ is going to have your little guys, and that's going to move kind of roughly the same. But I think the same thing. You're going to get a little bit more bang for your buck. And I like that. And I just wanted to kind of stress to the people why, when we say more volatility, we don't necessarily mean that we want crazy increased volatility, but it means we can use way less buying power and get the same goal, right? If I said, hey, this stock is going to move 1%, and then this stock is going to move 5%. Well, the stock that's going to move 5%, if I just wanted to shoot for the same return, I can use 1/5 less capital in that stock that's going to move 5% as opposed to the one that's going to move 1. So that's where I always go to is like, give me the most volatile thing out there and I will manage that risk by just taking it smaller and then less of my capital is tied up. If something happens over the weekend or something crazy like that, I don't really have to worry about it. So we talked about that, and then we also talked last week about MindMed and the psychedelic companies, and we said the same thing. Again, it's a good theme happening this week where we talked about the breakout that we had of $5 on MindMed, how that was a great trade of the week. Not to get Steve's head too big while he's here, and then we had this nice move up and this giant pop, and we had one of the headlines being that there was some FDA phase 2 type trial with MindMed that went very, very well. But we also talked about not being the guy who bought it as it was spiking up here. And it did the same thing. I used the 80 MA, Steve uses the 10 SMA. I bet you we could like switch them on each other's computers. We probably wouldn't notice much difference. But the idea is the same. You use some moving average and you say, instead of being the guy who's buying this thing when it's at, $11 after, doubling in a day, I'm going to wait. I'm going to develop a plan. I'm going to wait for it to come back. If it holds any kind of upward sloping moving average like that, that's the area that I want to buy. And I just wanted to point out that, to the tick this week, we had a lot of that action. So showing once again for Steve, you were talking about how gold and silver is going to be the thing you're going to watch. I'm going to continue to watch this one because I was very impressed with how it came down and it met buyers, because we know that the institutions, like we talked about, aren't the guys that chase, right? It's the retail guys who don't know any better. They're the ones that chase. When you get these supports coming in as stocks pull back, for me, that's an institutional player, right? That's a guy who has an order out there and he says, I want to own X amount of MindMed, but I'm not going to buy it up here. I can't without moving the stock. I'm going to start putting in bids, and as it comes down, starts to fill those bids, that's when I'm going to get more aggressive, and that kind of creates the floor. So,
And that's where I maintain that technical analysis works, whether it's a human being or an algorithm. It
yeah.
needs a key input, whether that key input is the 8 SMA or the 9 EMA or the 10 SMA. Doesn't
Hmm.
matter. It's a key input, and it's close enough. We'll talk about clouds, I imagine, in charts coming episodes. I hope, Michael.
I hope
But the
so. Yeah.
cloud bands in charts are more gray areas than lines. You can't look at these lines and have them be definitive to the penny. There's really a sloppy cloud, and we're going to start exploring some more of that in future episodes.
Yeah, the technical analysis, the way was always taught, I remember when I was back at the trading floor, one of my mentors always says, you don't draw your lines with a pencil, you do it with a crayon. And it was the same
Mhm.
idea that none of these, if someone says $8 is support, they don't mean 8.00 is support and 7.99 is under support. They mean the $8 area is support. And same as when we're talking about these moving averages, we're not saying you have to use this moving average and you put your buy point right at that tick, and if it breaks it, you're out. It's like these are areas that we think it's going to pull back from. And then, with Steve, he's got a short term area that he wants to look at, and an intermediate term area, and then a longer term area. And it's, again, just zones that, hey, I think there may be some price action going on here. But yeah, it's not down to the tick. So, Steve, did we get through it all, or was there anything that we missed?
No, I think that's it. Just to re-encapsulate, keep an eye on the gold miners this coming week. They look extremely poised. And by I mean poised, I mean the exact opposite of what people are doing and chasing. So hopefully you've learned something, taken something away. What Michael was just talking about is key. There's no reason you can't join those institutions on the pullbacks. And as I said earlier before, patience is a virtue. Fear of missing out forces us to chase these ridiculous charts.
Mm-hmm.
Just be patient because you're going to get your price eventually. And that's the important takeaway. But going into this week, the GDX and the GDXJ, I think, are poised in terms of consolidation. They're ready for another possible leg higher. So, also a reminder, please give us some charts if you want to look at. We didn't have any chart requests this week. We're happy to do those for people. Share the blog, share the podcast, tell your friends. We're trying to give value here. I've been doing this for 35 years. Michael's been doing it for, I don't know, 15. Maybe I'm
Yeah,
off.
15, 20. Yeah.
So you got about 50 years of experience here. Again, I kind of came from a family. I said my dad traded, so I watched him, do amazing things in the commodities market before I even started my venture. So there's a lot of experience here, and we were trying to give you guys experience and focus on some of the mistakes. And this week, the mistake is don't chase.
Yep. So yeah, again, like Steve said, wherever you're seeing this, if it's on a, give it a share or a like or whatever social media, button is, that really helps us out. Comments, we read all of them. Personally, we'll either respond to them personally, or if you want to look at a chart and there's enough requests for that, we'll take a look at it on the show. So thank you everyone for joining us. And that's it for this week. Stay tuned. Same time, same place next week on Sunday evening. Have a good one.